Hey everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. I'm your host, Desmond, and today we're diving into a seismic shift happening across the Atlantic. It's called Europe's fiscal policy pivot, and it's all about a bold new framework that's shaking up how Europe, especially Germany, thinks about spending on defense and infrastructure, right? So grab your coffee, settle in, and let's unpack this game changer. First up, what's this new framework all about? Europe, led by Germany, is proposing a radical rethink of its fiscal rules. For years, Germany's been the poster child of fiscal discipline with its debt brake, a constitutional cap limiting borrowing to just 0.35% of GDP. But now, Berlin's saying, hold up, we need room to breathe. The plan? Loosen those rules to unlock hundreds of billions of euros for defense and infrastructure. Think 500 billion euros for roads, energy grids, and housing over a decade, plus exempting defense spending above 1% of GDP from that debt cap. Right? That's a potential 800 billion euros injection across Europe over 4 years if the EU's broader proposals, like 150 billion euros in joint loans, get the green light. Right? It's a pivot from austerity to ambition, and it's got everyone talking. So what sparked this sudden U-turn? The trigger point is crystal clear. Geopolitics and a wake-up call from across the pond. Russia's war in Ukraine, now grinding into its third year, has Europe rattled. Add to that, Donald Trump's return to the White House, pushing NATO allies to spend more, way beyond the 2% GDP target, and threatening to pull US support if they don't. Right? Germany, for one, could see its defense budget jump from 80 billion euros to 140 billion euros, right? 3.5% of GDP, without Uncle Sam's safety net. Meanwhile, a stagnating economy and crumbling infrastructure at home have piled on the pressure. Berlin's realizing that clinging to fiscal conservatism might mean losing its edge in a world that's rearming fast. Right? It's a now or never moment, and Europe's stepping up. Which countries stand to gain from this spending spree? Right? Germany's obviously front and center. It's rewriting its own rules and leading the charge. But look east, and you'll see Poland, Finland, and the Baltic states, Estonia, Latvia, Lithuania, rubbing their hands together. These nations, close to Russia's border, already spend big on defense. Poland's at 4.1% of GDP, and they're itching for more flexibility to bolster their militaries without EU budget cops breathing down their necks. Then there's France, always eager to flex its geopolitical muscle, and smaller, frugal states like Denmark and Sweden who've warmed to joint borrowing for defense. Even cash-strapped municipalities in Germany could see 100 billion euros from that infrastructure fund. Right? This isn't just a German story, it's a European one. Now, let's talk money. Specifically, which asset classes are set to cash in. Higher fiscal spending loves two things: construction and defense stocks. Infrastructure cash means more bridges, railways, and energy projects, so companies in building materials like cement giant Heidelberg Materials or engineering firms like Siemens are primed to benefit. Why? More government contracts, plain and simple. On the defense side is a bonanza for arms makers, think Rheinmetall in Germany or France's Thales. With defense budgets ballooning, demand for tanks, drones, and cybersecurity tech is skyrocketing. Bonds could also get a lift if joint EU debt issuance takes off, though markets are still sizing up the risk. And don't sleep on real estate. Housing investments could juice up property values in lagging regions. Right? It's a fiscal shot in the arm. And these sectors are the veins it's flowing through. So there you have it, Europe's fiscal policy pivot in a nutshell. Germany's leading the charge, triggered by war and waning US reliability, with a ripple effect that will boost its neighbors and key industries alike. What's next? Will this rearmament remake Europe's global standing? We'll be watching this unfold closely. Thanks for tuning in, and in the meantime, do remember to subscribe to our podcast here at IronFX, where we're dedicated to bringing you the very best education to take your trading to the next level. Until then, stay informed and stay tuned.